Bankers who have all along been opposed to the Banking Amendment Act of 2016 that introduced caps on interest rates are this time saying the success of the ambitious Big Four agenda of food security, universal health care, infrastructure, and housing is strongly hinged on the banking law.
Indeed, yes, we'll need to address the issue of availability of credit if those ambitious targets are going to be achieved. And especially the role that will be played by the SMEs and the households in driving those objectives.
The artificial manipulation of interest rates by the capping interest rates at 14% and government borrowing at 12%, and government borrowing you are exempted from tax, meaning in net terms, banks make more money lending to government than lending to entrepreneurs. You have dried up credit markets, so let alone women, just the entire business community.
The bankers have renewed calls on the government to remove interest rate caps in what they say would unlock credit to the private sector, who are the main drivers of the Big Four agenda. Bankers claim the law that was expected to spur growth and ensure Kenyans access cheap credit has instead ended up crowding out the small borrowers, such as the SMEs.
The intention of manufacturing is to move it from about 8% today in terms of its contribution to the GDP to a very ambitious target of having a 15% contribution to the GDP. Now, for that to be achieved, the role played by the SME within the manufacturing sector will be so critical. And the SMEs have got to be enabled through access to credit.
The others have changed course. We are stuck on what I call a low equilibrium trap of interest rate being, credit expansion to the private sector being at around 2%.
Bankers claim that the banking law has seen most small borrowers opt for short-term loans from informal lenders who lend at higher interest rates since their loans are not regulated. Olaka is calling on legislators to review the interest capping law since it has distorted the credit market and interfered with forces of demand and supply.
KBA family believes that arbitrary price controls are neither in the best interests of the broader economy nor the households and businesses that the legislature sought to support.
The number of loan accounts have actually come down. So if you're seeing the volume of loans increasing, but the number of loan accounts coming down, then it tells you that the average size of a loan has actually increased.
The introduction of the interest capping law has seen a reduction in the number of loan accounts by 1.2 million between 2016 and 2017. Judith Akolo, Channel 1 Business.